right, Daniel. Great to see you.
Great to be back again.
Today, episode 2, we're going to talk about, from a high level, top things that you see that nonprofits, where they may be making some mistakes or may have some things that are off that could affect them in their day-to-day operations and how their accounting and bookkeeping is handled. Is that right?
For sure. With my experience in audit and then working for a nonprofit for a number of years, thought we could give a few tips and things to look for mistakes that may be made and reasons why you might need to pull in somebody like us to take a look at your books and help you improve your administration and accounting.
Okay, ladies and gentlemen, so put your seatbelt on. This is going to be a wild, just adventurous episode here in the world of accounting in nonprofits. But as you know, it's very important because this is how things get done. Things get done the right way each and every day. So what's number one?
So we'll try not to put you to sleep here. So I know this is a riveting topic for everyone, but I think the first thing that I see happen sometimes is just not having a good foundation in place, just treating the administration as an afterthought. And that would be something that a lot of nonprofits care a lot about their mission and their focus on serving the front line of their clients, and they want to be there for them every day. But if you don't establish a good foundation ahead of time, then you end up creating issues that catch up to you. And at some point, it tends to become overwhelming and pull the executive director or senior leadership away from serving how they want to serve because they never thought through and set up things ahead of time in a way that makes sense.
Got it. So a bad foundation.
And sometimes that looks like just having poor records, not knowing where invoices are, not getting receipts out to your donors, not having those processes in place. And you might have a very charismatic leader who's able to fundraise their way out of issues, but if the backside of thing, the records just aren't being kept, and maybe you've had staff turnover or volunteers are trying to come in and keep things filed, but you don't know where the records are, then you really don't have a good foundation for providing reports or making good decisions for the organization.
And if there's anything more to share here, what do you think the biggest reasons are that the foundation is not squared away from the start?
I think the tendency is to jump 2 feet in and serving your guest. And a lot of times, especially for nonprofits that are getting started, you're not usually equipped for the administrative side of things, because you care about you have a heart for the ministry or the passion for the project that you're working on, and all of the nonprofit administration is just necessary evil, so to speak. It's something that you feel like you have to do in order to move forward, but there's not the thought put into it ahead of time to just create that structure that's going to serve the organization for the long term. And so you just end up piecemealing things as they come and not just putting the thought into it that creates a good, solid structure and foundation for the organization.
And so what are the consequences if somebody has, a man or a woman listening to this, has a poor foundation or a foundation that's not structured the way it needs to be for them and the results they need to have? What are the consequences if they continue down the path that they're on?
I think it contributes to, at times, to staff burnout and losing staff because things are just disorganized. And it also can create issues as you get larger with your audit and not having a clean audit. Auditors may be raising management issues, meaning that they've not been able to complete the audit in a thorough manner or a manner that makes sense. And so not getting a clean audit can also then impact ultimately your donations and your ability to serve your mission, because then you've had questions raised by either the government that you're submitting the audit to, or from donors that are taking a look at those things, and you just don't have the foundation then to continue to grow the ministry and the mission that you are carrying out.
So I don't want to be unnecessarily biased here, but because this is what we do. But if somebody's listening to this and something is not set up in a way, or they're experiencing issues or problems like to what we're talking about here, what should somebody do to wrap their head around it and then to move in the right direction?
I think finding someone with that skill set, a bookkeeper, an outsourced CFO like us, sometimes your auditors may have recommendations for you, but because you're not allowed to audit your own work, the auditors can't step in and solve this for you. You need someone with the experience and expertise to be able to come in and establish some good controls and good systems and clean up your books in a way that the auditors can come in and conduct a clean audit.
Okay. What is point number 2?
So this is related, but it's just considering all the administration and accounting just as unimportant. So similar to not establishing a good foundation, but even if at some point in the past you had a board or a treasurer who had a foundation put in place, and then you just consider it as unimportant, then you end up usually with poor internal controls because you're not having the leader of the organization is not giving the priority to keeping things clean and keeping things organized. And so that filters down through the organization, and you just end up usually with some people have too much ability to control things, or expenses get out of line because there's not controls over it, or just the things tend to fall apart if you don't give it the attention as a leader to recognize that this is important for the ongoing operations of the organization.
So what is the real life consequences of this?
If you don't have good internal controls in place, what accountants term internal controls means keeping it separate between who's authorized for a transaction, who's conducting the transaction, who's recording the transaction. And if you have someone who's doing all of those things and you don't have internal controls, even if there's not abuse or fraud or those scary things that we think about, you open yourself up for criticism. As an accountant, I don't want to be accused of fraud or be accused of taking money or spending money that I shouldn't. But if you don't have those internal controls in place and some checks and balances there for someone else to be looking over those things, then even if that doesn't happen, you're opening yourself up to criticism of there being fraud or abuse in the organization.
So what should somebody do if they're potentially in this situation? What are some next steps that may help them?
The auditors usually, as part of the audit, will conduct some control testing. And so the auditors can give some advice on what good internal controls are, but the auditors, again, cannot perform those controls. So some nonprofits can be very small, and I'm well aware of folks wearing multiple hats. And so using an outsourced bookkeeper, an outsourced virtual CFO like us, to toot our own horn a little bit, can allow you to put some controls in place for someone else that's conducting a reconciliation or looking over your books each month in a way that adds some controls that you may not have the ability to perform yourself as an organization, or to be able to ask an external auditor to do, since they, again, cannot audit their own work.
Okay. What's a third?
Sometimes nonprofits get started and treated as a personal possession of the founder. And I think that leads to poor culture in the organization overall. Nonprofits are not taxed entities, they're tax exempt because they serve a public purpose. And so nonprofits have boards of directors for a reason, because there's what accountants call fiduciary duty to oversee the organization for the public good. And so you can have situations where you have longtime staff members or leadership or a founder who has just treated the organization as their baby because they love it, and that's been their mission and their heart. And while those are wonderful qualities, there needs to be a recognition that this organization goes beyond just their personal mission and their personal even lifespan. If they want the organization to continue and to do the most good and serve the most people, they need to really have a board of directors and have a administrative structure that allows that good foundation and allows for the ministry to continue and not just be used as their personal project that they're mingling funds or treating as their personal piggy bank when they raise funds, but really have that duty to make sure that the donations coming in and the expenses going out are serving the organization's purpose and not their personal benefit.
So professionalizing the organization is what you're saying, and not letting all the hard work and commitment where that affects the organization from a continuing to evolve down the road.
For sure. I've met some amazing folks working in the nonprofit space, and really you see people who have poured out their heart into a ministry. And so just to recognize the value that's there and the need to bring that structure and that professionalism to the organization will really increase the impact of the organization when they let go enough of the controls and are able to bring in help and bring in others to surround them who can continue to steward that ministry.
And let's say somebody listens to this, let's say they know that they have some things that are not where they need to be. And let's say they're in a different part of the country than where we are in the Southeast. What would you say to somebody if they have an issue, they want a really good service, they want somebody that's going to be here, be committed, but they're across the country in the Midwest or on the West Coast? Is anything that we're talking about here that we do, are they restricted by geography?
The beauty of technology is you can leverage, there's that word leverage, you can leverage technology and tools and pick up the phone and call us, or we can jump on a Zoom call and talk through some of those issues that you're having and see if there's a way that we can help.
And I guess to just make that a little more clear, once you have QuickBooks Online, once you have things like Gusto or ADP or whatever, all these things can be handled remotely.
We've really seen the adoption of cloud technologies. Intuit, they're still technically selling, I think, some of the desktop versions, but QuickBooks is pushing their cloud-based version, QuickBooks Online. There's Sage Intacct, or there's other accounting software. There's the payroll software that you referenced. There's bill pay software now online. There's the entire software industry has moved toward cloud-based products, so that there's really all of the administrative tools you could imagine are available in the cloud and remote access.
That's awesome. Well, maybe one day soon we'll talk about the future of this space, the future of the accounting industry, and how that affects how things are becoming more and more technologically driven. And there's going to be fewer and fewer people that can do a good job day after day and be committed and add value.
I think just as the accounting industry sees shortages of staff, it's going to be more important to not confine yourself to a local geographic area when you're looking for help, because it's going to be harder and harder to find those folks locally who are experts in what you need. And so the beauty of the world we live in today, it can be a blessing and a curse, but the beauty of the technology to allow you to connect with people who can help you and are experts in what you need without just being confined to somebody because they happen to be located next door.
Got it. Okay, man. Thank you. And we'll see you next time on the next episode.
Sounds great. Hey, everyone. This is your co-host, Daniel Weaver, and I'm the managing partner with CFO Leverage. Thank you for listening to another episode of the Maximize Your Impact podcast by CFO Leverage. If you've enjoyed this episode, would you share this with a friend or leave us a review on your podcast platform? If you have questions about what you've heard or want help creating a solid administrative and financial foundation at your nonprofit, we want to hear from you. Please contact Sam Coates or myself on our website, www.cfoleverage.com. That's www.cfoleverage.com. Have a great day and go maximize your impact.